This is Nigeria, giant of Africa. Nigeria is also a nation of interesting people, culturally diverse, creatively enterprising, patriotic, adventurous, happy-go-lucky, and very hardworking. But even though many of the nation's citizens are hardworking, many remain under the poverty line, living in less than $1 a day. This is such a great irony for Nigeria, a nation with over 70% of its population under the age of 35, young, vibrant, energetic, enterprising, creative with a can-do spirit. It is also an economy where over 50% of its GDP is generated by activities of micro, small, and medium-scale enterprises. Yet, less than 5% of these MSMEs have access to credit within the financial system. But Nigeria is not alone in this quagmire. To understand this trend against the context of globalization, here are a few events that are likely to shape the next 2 to 5 decades if strategic support isn't given to MSMEs. According to the United Nations Department of Economic and Social Affairs, the current world population of 7.3 billion is expected to hit 8.5 billion by the year 2030, 9.7 billion in the year 2050, and 11.2 billion in the year 2100. To manage this growth, 600 million jobs need to be created over the next 15 years to absorb a growing workforce globally. The employment needs in Nigeria will only require 30 to 40 million jobs by the year 2030. Currently, 50% of Nigeria's GDP is attributed to MSMEs, and this is expected to grow to 70% in 2050. And even though there are over 37 million MSMEs in the country, only less than 5% of them have access to credit in the financial system. As of 2010, about 46% of adults in Nigeria were excluded from financial services. Looking at the data, both domestic and global, development finance suddenly assumes a scale of global emergency when juxtaposed against population growth.
Hi, Pikin, how you doing?
Papa, I say make I remind you about that loan.
Loan, I beg.
Hello, Papa?
Jenny. Auntie, please, I need a loan.
MSMEs are collectively the largest employers in many low-income countries, including Nigeria. Yet, their viability is being threatened by lack of access to risk management tools such as savings, insurance, and credit. Indeed, their growth is often stifled by restricted access to credit, equity, and payment services.
If you want peace and prosperity for a country's population, you have to make sure that you promote growth, but more than that, you must make sure that that growth is done in a way that is fair, that is equitable, that generates jobs, that addresses poorer areas of the country and poorer percentages of the population so that you carry as many people along as you can.
Our medium-term plan is to ensure that every MSME that desires financing will have option to be able to get options. So we want to create as many options as possible, especially long-term fund financing for them.
It is a model that minimizes the key risk factors.
I'm really proud that we could support the founding of DBN and support now the business of DBN, since DBN is really relevant for supporting Nigerian small and medium-sized businesses. Our main business is supporting small and medium-sized enterprises in the German economy. DBN does this not on a direct lending basis, but using partner banks, commercial banks. And it's the same business model we as KfW do have here in Germany. We have positive experiences with that, and as far as I can see, the same holds true for DBN in Nigeria.
Development Bank of Nigeria, DBN, was conceived by the federal government of Nigeria in collaboration with the World Bank, African Development Bank, German Development Bank, KfW, French Agency for Development, and European Investment Bank to address the major financing challenges facing micro, small and medium-scale enterprises, MSMEs, in Nigeria. Development Bank of Nigeria provides sustainable financing through eligible participating financial institutions, PFIs, who will in turn lend to end borrowers, micro, small and medium enterprises, MSMEs. DBN obtained its wholesale development banking license in March 2017 with a vision to become Nigeria's primary development finance institution, promoting growth and sustainability. The DBN model is designed as a simple and easy-to-access on-lending model, which allows for scale and broader reach, working through participative financial institutions, PFIs. Today, the DBN model is an operational entity as it seeks to fulfill three key mandates. Increase access to finance for MSMEs by lending to participating financial institutions, commercial banks, microfinance banks, and other development finance institutions for on-lending to MSMEs. Provide capacity building for participating financial institutions to enhance their ability and willingness to lend to the MSME segment. Provide partial credit guarantees for participating financial institutions to encourage them to take the risk of lending to MSMEs. DBN loan repayment tenure is flexible, up to 10 years with a moratorium period of up to 18 months, and the pricing is pragmatic and referenced to market rates.
Basically, the problem that led to the establishment of the Development Bank of Nigeria was that it was observed by the government that the country, Nigeria, had experienced rapid economic growth. Between 2000 and 2010, roughly around 10% average growth of GDP. Between 2010 and 2013, another roughly 7.3% rate of growth of GDP, which is quite quick, which is quite good. Unfortunately, however, it observed that in 2004, 68% of Nigerians lived below the poverty line. 10 years after, even after substantial growth rates, the percentage of Nigerians living under the poverty line was still around 68%. In 2004, the unemployment rate was about 21%. By 2014, after 10 years of rapid growth, the rate of unemployment had climbed from 21 to 24%. How do you support them? The problem is that the existing commercial banks generally are reluctant to support this sector because of the perceived high riskiness, the very high mortality rates of SMEs, their lack of collateral, their lack of business experience, and so on and so forth. So they were reluctant to lend to them because they were perceived as high-risk sectors. And therefore, it fell on the development finance institutions in Nigeria to fill this financial gap. That financial gap was estimated at over 10 trillion naira. And the SMEs at that time, MSMEs, were getting only about 5% of financing from the banks, even though they were responsible for about 82% of jobs in the country and nearly about half of GDP. The idea is that since the existing development finance institutions in this country were not doing well enough to fill that gap, it was felt that it was necessary to establish a new development bank which right from the outset is constructed in such a way as to avoid some of the difficulties and pitfalls experienced by DFIs globally and in Nigeria, so that it can now succeed in promoting the objective of rapid employment in the country, as well as promoting and encouraging growth and local domestic value addition. It was in that context that the Development Bank of Nigeria was set up to help through lending and through leveraging with other finance institutions in the country to try to help fill the financing gap and get the SMEs going again as instruments.
So our medium term is to ensure that almost all the financial intermediaries or financial institutions in Nigeria that are able to meet our eligibility criteria are onboarded to enable them have assets. So they have options. They can go to their banks, go to their other financial institutions to be able to ask for this loan. That is one. Secondly, in the long term, we expect that we should be able to control to a great extent the market, over 10% of funding in that market, in terms of providing longer tenor funds for them on a sustainable basis. The key word for us is sustainability, which we want to ensure that this segment of the economy continue to have access to financing, but on a sustainable basis.
You will not find that many other development financial institutions with the design of a wholesale bank. Mind you, generally some of the international development financial institutions, or what we call multilateral development financial institutions, have actually windows. The Asian Development Bank actually lends through financial institutions, commercial financial institutions, to reach SMEs. The African Development Bank also have the same model where we go through development commercial banks to reach the SMEs. And if you look at their portfolio, it is generally low risk and the defaults are very low, and therefore it is a very good model to adapt to.
Since inception, DBN has engaged a wide range of commercial banks, microfinance banks, and other development finance institutions, and up till date, close to 15 participating financial institutions have come on board.
Access to our loans is easy. We understand the day-to-day business growth challenges of SMEs, so we offer a listening ear. We're able to provide advisory to support you, to bring you into a group of people that are able to share experience, provide access to markets, because we do have big company players, so some of them are the customers that actually offtake the outcome of your products and services. We're a partner that is sure. We have experience across Africa. We have a large customer base. We have a large network. We have the digital platforms. And with DBN, we have a good partner that brings affordability. And therefore, this is the bank you should come to in order to realize your ambitions.
It has largely been a collective and shared responsibility between us, because we are both motivated by common ethos and desire to alleviate the challenges faced by SMEs, particularly in the area of access to sustainable long-term financing. So that partnership, I think, is a shared objective, which that collaboration works very well with DBN. I would say one competitive advantage that we have is our wealth of experience in processing intervention funds for small businesses, especially the underserved ones. We also make sure that we cater for the needs along their value chain. A very good case in point to mention here is DBN Credit Finance for aggregators specialized in agro-processing. With the loan, the customer has expanded his storage facilities, thereby reducing product wastage for smallholder farmers along their value chain. So I think that, this is particularly focusing on agriculture, but there are several segments these SME play in, and I think that our deep understanding and collaboration has helped us meet those critical funding needs of small businesses in Nigeria.
Through some of the things which we do, also support them through capacity building. All right. So today, if you ask me, I think we must be supporting anywhere near about 1,000 women by way of this facility. There are people in the textile industry who have benefited. There are those in the leather industry who have benefited. There are those who are getting into the hospitality sector and catering that we've provided money. It's a large number of people, all right, that we've provided this funding to. The good thing about the structure of the funding is that while it allows for MSMEs, it also goes up a bit more to SMEs, all right? So it's a broad spectrum of women that we have supported. There are cases of people who have had startup restaurants, and through the on-lending arrangement from Development Bank of Nigeria, we've been able to help them grow. So it's a large number of cases.
We were really delighted, to see a financial institution like the DBN, coming up, and therefore it was very easy for us to take the decision to enter into partnership with the bank. And within a very short time, we have been able to access 3.2 billion naira for all the purpose of all lending. The impact that has had on our portfolio is that it has enabled us to reach a larger number of clients, and which is our prime objective, that is to expand the access of financial services to a larger number of people, especially those who are usually excluded from the mainstream financial sector. The additional impact is the fact that it has increased the volume of business, and that also translates to a superior financial performance in a way.
Our relationship with the Development Bank of Nigeria has actually created value to the bank, to our customer. The first 100 million was granted. The subsequent 830 million was granted also using our book debt, that is through National Collateral Registry.
Undoubtedly, the MSME sector is critical to the development of the Nigerian economy as it possesses great potential for employment generation and output diversification. Nigeria's population growth and urbanization has resulted in a spike in demand for consumer goods, which creates the market for small and medium-scale enterprises to thrive. Here are a few who have real-life stories.
I cook for my neighbors. Most of them work, and a lot of time they ask me to make some food for them. And at a time, it was like you could actually do this in big time. And that was how Lably was conceived. We thought of expanding the business, but then we were restricted with fund. The DBN loan was introduced.
I heard about DBN through TV adverts. There was need to get a loan to facilitate the growth of this school. And what fascinated me about it is that the process did not take a long time.
A friend, a banker friend that told me about the DBN loan. He showed me what are involved. It was a good one. I said, okay, let me buy into it.
Before now, when you consider other costs, salaries and other things, importation of vehicles for use, maintenance of the old vehicles, it was not that easy. We were struggling to put up our permanent site, our ultra-modern park. In fact, that was the essence of us looking for a loan from FCMB, which eventually we got it from DBN.
Through the microfinance that I got the loan, I applied. Within 3 days, I was being funded. I was doing a stock of about 40,000 fish. But immediately when I accessed the loan, I have to increase to 65,000 fish.
We got this DBN loan to fund the construction of the proposed Top Faith University. As an investment company, we basically invested in educational institutions, which include Top Faith International Secondary School, Top Faith Legacy College, and Top Faith Montessori Nursery and Primary School. And what we did was basically market our schools. Students would come in, pay school fees, and we basically use that for the everyday running and operation of these schools. We, of course, employed staff, carried out educational activity. And it was until we decided to expand further. It wasn't until we decided to expand further as, move from the normal high school level to a tertiary education institution that we then decided to get a loan to aid us in achieving that dream. I would indeed recommend that other MSMEs take advantage of the DBN loans.
I had the opportunity to visit DBN in Abuja at headquarters. I was really impressed of the management quality of management of DBN. I was really impressed of the professionality of staff. But you cannot only get personal impressions, you can also look at rankings and ratings, and there you can see that DBN is a well-renowned and a well-established institution serving the Nigerian economy and the Nigerian private economy.
The DBN model, I don't think there isn't another exact replica of that model that I know of globally. What has happened in the case of DBN, it has borrowed from what has worked in other development finance institutions in the world and has tried to avoid what has not worked, both globally and in Nigeria. So it has developed what we refer to as a mixed approach, for which there is no exact equivalent in the world. In the case of the Development Bank of Nigeria, even though the government has majority shareholding, the board of the bank is structured in a way as to ensure that there is a majority of independent directors, so that these directors are recruited on the basis of their vast knowledge and experience in that sector, so that they can operate and provide leadership, strategic leadership to the bank to be able to achieve its objectives. And even these independent directors, they are recruited through an open and transparent process, competitively, rather than being appointed. Another dimension, for example, that the DBN has learned from institutions like the BNDS is to avoid it being set up by an act of parliament. It may become an instrument of narrow political objectives, but instead to register it as a public liability company under the Company and Allied Matters Act by the Corporate Affairs Commission, so that it can operate independently as a public liability company and therefore maintain both development as well as commercial objectives. These are some of the features of the Development Bank of Nigeria, which it has borrowed in an ad hoc manner from different institutions based on what has worked and what has not worked.
For the MSMEs, like I'd always say, this is a new dawn for them. Because this is the first time a financial institution is being set up strictly to focus on micro, small, and medium enterprises, the engine of every economy. So that is one. So for them, it's a new dawn. I will encourage them to take advantage of this bank that is here for them to access financing from their financial institutions. What I will encourage them to do is to approach their financial institutions, even if they are not yet working with DBN, if they've not been onboarded with DBN, they should ask their financial institutions, why are they not working with DBN? So that is on one point. They should be able to encourage them. Secondly, with the engagement we're having with the financial institutions, we want to ensure that all financial institutions that are eligible are outlets for us to do our lending, on lending to them. So we create options for them to be able to have access to the funding from different sources to ensure that they are able to have competitive pricing in the long run. For the financial institutions themselves, from the ones that we started working with, I can assure you that they've seen how effective this has been, how efficient our funding has been, and how encouraging our intervention in terms of trying to provide technical assistance, guarantees, and encourage. So we continue that engagement. We'd like to talk to those ones who have not yet come on board. We continue to engage them and expect that as time goes on, we'll be able to have them on board. The idea is to ensure that all eligible financial institutions in Nigeria are partners with the Development Bank of Nigeria to provide access to financing for these micro, small, and medium enterprises.
It is a new dawn for MSMEs in Nigeria. The time is right, the stage is set, and Development Bank of Nigeria is poised to change the landscape for MSME financing in Nigeria. Welcome. Visit your bank, ask for a DBN loan, comply with your bank's due process for accessing a DBN loan. If approved, DBN will disburse the loan through your bank. Development Bank of Nigeria. Financing sustainable growth.